So we are joined today by the CEO and founder of Delta Exchange, which is a futures perpetual swap platform that accepts Bitcoin and uses USDC and Tether. Um, Welcome, Pankaj, to Whalepool. Thanks for coming on.
So thanks for having me. Really excited to be here, and I'm really looking forward to this conversation. Hello, everyone, and it should be a good 1 hour of interactive conversation. Looking forward to it.
Absolutely, and yeah, a lot of the users here are traders of different expertise. Some are algorithmic traders that are heavy API users, even some market makers, and others are more retail type traders. So we cover basically the whole spectrum. But let's then start with the basics, some background, general information. So, what is the jurisdiction of Delta Exchange? Where are you operating out of?
So the company is registered out of Saint Vincent and Grenadines, which is in Caribbean islands, and that is where we are registered. We have offices in Singapore, India. We also have some teams sitting out of Europe. And let me also, for the benefit of users, also mention that for those of you who don't know Delta Exchange, we are, like Swapman said, we offer futures and perpetual swaps. But the way we are different is we offer them on Bitcoin, but we also offer them on other 30 altcoins. So we probably have the largest selection of coins on which you can trade derivatives out there. And we are also the only exchange to offer Bitcoin and Ethereum move contracts. So you can trade, volatility on Bitcoin and Ethereum. And we are soon going to add volatility products on other altcoins as well. Few interesting things also coming up, which are interest rate derivatives on cryptos. But going back to where we are registered, like I said, we are, the company is registered out of St. Vincent, and we have offices across the globe.
Great, yeah, and I noticed that you have Bitcoin for deposit and withdrawal, and then users who deposit Bitcoin can convert that into USDC and Tether. And then you're running both inverse style Quanto inverse style contracts where you are using Bitcoin as collateral, but also Quanto contracts in the sense that you're using USDC or Tether as the collateral, and then doing a one-to-one transformation of the price versus the index, which is USD based. And then you have a third type, which is just basic linear, where you're using Tether as collateral and trading an index that is crypto versus Tether. Is that correct?
Yes. So we have deposits and withdrawals only in Bitcoin, but you can hold three currencies on the platform. You can hold Bitcoin, you can hold USDC, you can hold USDT. And the way to do that is, you bring Bitcoin and then you can convert it using a RFQ on the platform to USDT or USDC. We have recently added USDT. Earlier, it was Bitcoin and USDC. The idea is to offer people an ability to sit in Bitcoin or sit in a stable coin. There are times when you don't want to have any position in the market. And at those times, you want to be sitting in a rather stable currency. Market is falling. You don't want your balance to fall with that as well. So we offered stablecoin holding facility as well, and it is also used as margin for some contracts. So there are certain contracts that are linear, primarily Ethereum. So Ethereum is linear, Ripple is linear, Litecoin is linear, BCH is linear. All these contracts are vanilla futures, and whereas Bitcoin is an inverse future. The reason to do that is that when we also offered vanilla futures on Bitcoin, but there was low demand for them. And we realized that people prefer to hold Bitcoin. They prefer not to sell their Bitcoin and even margin in Bitcoin for Bitcoin contracts. So we offered inverse contracts for Bitcoin. Now, our experiment with Bitcoin vanilla futures was 1 year back. So we were the first exchange to start offering stablecoin settlement and linear futures, which were on stablecoin. So BTC, USDC futures were available on Delta Exchange since February of 2019. At that time, it didn't do that well. So we discussed.
Ooh, you broke off there at the end.
So yeah, I was saying that we had experimented with vanilla futures or linear futures on Bitcoin about 1 year back, and at that time we felt low demand for it. But now we are bringing them back again because now there's more and more demand for vanilla contracts on Bitcoin.
So, but how are you going to do those vanilla contracts? Are they going to be a tether index that you use then tether to margin and get PNL, or is it going to be USDC margin? So you do a kind of Quanto conversion from a USD index for that.
So that's a good question, actually. And the interesting thing to note there will be that the underlying for BTC USD inverse contract will be different than BTC USDT vanilla contract. We are going to offer a BTC USDT vanilla contract. And for that, the price of spot or the underlying, we are going to take it from bunch of places where BTC is traded against USDT, the top 3 most liquid exchanges. There you should have BTC versus USDT. You should not have BTC versus USDC. What I'm trying to say is we don't mix prices. We don't think that BTC USD is same as BTC USDT, is not same as BTC USDC. So when we define a BTC USDT contract, it is going to be based off BTC USDT prices. And we are going to take those prices from top exchanges where there is most liquidity in this pair, which would be Binance, Huobi, Bitfinex. So the underlying for these two is going to be slightly different. It is not going to be a Quanto contract. And to be honest, USDC, we are looking to fade it out. We started with USDC because about a year back, there was a lot of volatility in USDT. And now that has subsided. Now there is a larger acceptance of, there was already a large acceptance of USDT, but now there's much more. And over a period of time, you will see that we only have BTC and USDT as the 2 currencies that you can hold on the platform. We will discontinue USDC in some time going forward.
Yeah, I think that's the most technically accurate way to specify the contracts is making sure that you only call it a truly linear contract if the margin matches the index in terms of which the quote currency is being used. So if there's a USDT index, then using USDT as the margin would make it a linear contract. However, what you are calling Quanto contracts is in fact when someone is using USDC, the Circle coin, stable coin, as margin, and there's a USD index, then technically, because of this differential, it's classified as a Quanto contract, which is the most technically accurate way. I agree completely with that. And I also think it's prudent that in the beginning, maybe you were a bit wary of Tether. I mean, I think all of us remember the dislocations in the price that have happened, and the crypto capital loan which was made from Tether to Bitfinex, and that effectively it makes Tether under collateralized, about 10% under collateralized, I think, at this point, because Tether has about over 6 billion in USD assets now, and there's an outstanding $500 million loan, so that's about 90%. But the market doesn't care, apparently, because it's been trading relatively close to par
at
for
a premium.
the better part of a year. Yeah, even at a premium, exactly.
Yeah,
So Tether is definitely the market's choice for stable coin in USD, and it's been really stable despite all of the drama that's been around it.
absolutely. And we've been through a bad time, right? Usually cleaning happens in these kind of times. So that also gives us a lot of confidence. Usually it's the bad times, the bear markets, where a lot of these things come out. And we've already, seen a elongated bear market. So it gives us a lot of confidence that, look, if it has been fine till now, and if it has getting more, if it has been getting more and more allocations, then A, it's market's choice clearly, B, it looks more solid. And despite the fact that, like you said, it should be under collateralized, it should be trading at a discount in that regard. If it is under collateralized, but it's trading at a premium. So that sends a signal again to the market. And that is why we are also a lot more comfortable in offering USDT now. Whereas the counterpart USDC is much less popular as it was earlier.
Exactly, and that's a good point about the when there's an elongated bear market. This is a true test of these different models, and I think it's Warren Buffett or somebody says that when the tide comes out at the beach, that's when or that when the tide comes in when you're on the beach, that's when you see everyone who's naked,
Yeah,
and
absolutely.
so Tether seems to have done pretty well. Um, and
So
obviously the OKX and Binance Tether futures have been quite successful as well, which is another endorsement of using Tether as margin for these contracts.
absolutely. And you made a point about why did we use USDC contos? And we get this question a lot, that why not just have Ether USDC linear contract? Why do a Ether USD conto into a USDC? And the reason for that is precisely that underlying is actually Ether USD. So we are taking prices of Ether USD to mark your contract to create a fair value, which is again used to liquidate and create a fair price and then liquidate people if required. So it's important to have that sanctity preserved when you're doing these things, because there will be a freak day when prices can be 10% here and there, even for stable coins.
Yeah, you got cut off again. But I agree with that point exactly. And
Yeah,
that's what I was complimenting before. That this has to be precise, and you're right. There can be freak occurrences in the market where there is a dislocation, and you have to have the structure in place to deal with it when it does happen.
absolutely. And that is why because the underlying price is Ether USD or XRP USD, because Ether USDC is not liquid. So we cannot make an underlying out of it. XRP USDC was not liquid anywhere. So we could not make an underlying out of it, a healthy underlying. So then, if making a poor underlying is a much, much risky call than making a Quanto product that, look, let's trade Ether USD, but we'll use USDC as a settlement currency and we'll use the Quanto mechanics to settle into that, because that is still a easy risk to manage, both for the market makers and for the customers. And it's just not that easy to manipulate a more liquid, underlying. So it's just more safer product.
Definitely. So let's rewind back to the bit of a background, general stuff. Can you tell us a bit about the team's credentials and size and background of the key members?
Sure. So I come from a derivatives trading background. I was part of UBS Investment Bank in Hong Kong, working on the derivatives side, one of the largest Asian equity derivatives side globally, derivatives desk globally. And then, went and joined a hedge fund, did options trading. We were doing primarily gamma short strategies, a bit of quant strategies like correlation trading and dispersion trading. And after that, set up derivatives business for a London-based bank in India. So yeah, that is my experience about of experience in derivatives. And then I joined two of my very close friends to start Delta. One of them again comes from a very good, financial markets, capital markets background. So Jitinder, who's my other second co-founder, he used to work with GIC in Singapore on the money market side, and then with Citibank in India on the investment research side, and was very closely involved with taking a bunch of Indian internet companies to IPOs and helping them with fundraise. So between the two of us, we have very good understanding of financial markets, multiple asset classes. We've spent bunch of years there and worked with institutional clients primarily. And then our third co-founder, Saurabh, who basically looks after our technology. His background, he's a star technology background. So he started his first food tech company, became the largest food tech company in India, and then got investors like Sequoia, Matrix, Nexus, marquee VC funds involved, sold it off, and after that started.
Oh, you got disconnected or broken off again.
Am I audible now? I think it should be.
You're back on now. Yeah, you're back on now.
So yes. So I was telling you about Saurabh's background, and after his first company, he basically joined a company called Hotstar. Now, a lot of your users might not have heard of it. It's a video streaming app. The scale of it is sheer enormous. So it has about 400 million subscribers, which is like a third of India's population. And it is bigger than Netflix, Amazon Prime, and Hulu put together. They stream content and cricket matches and live matches, and they at times they handle concurrent traffic of about 20 million people. So 20 million people continuously streaming data through their platform in real time. And that's the kind of scale Saurabh has built for. So we are very comfortable to have that kind of technology in our team because we know that this business is about building for scale. Derivative exchanges need to be able to handle tremendous scale. And what we have seen in last 1 year or so is just the tip of the iceberg. As users multiply, as more and more coins on which you want to offer derivatives multiply, and you want to be offering them on the same wallet. So let's say Delta Exchange, we currently offer 30 altcoins. 17 of them are on Bitcoin. You can margin through Bitcoin on 17, 18 of them. And for rest, you will have to margin on stable coins. But technology-wise, we have built to be able to offer leverage on 100 altcoins on the same wallet. So that's the kind of technological foundation we have built in our platform, and it's all credit to our CTO Saurabh, who comes from this experience of building for huge scale. So beyond that, we have a bunch of other engineers. We're close to 35-member team, very heavy tech focused team.
Yeah, I think those are two of the core, I would say two of the three core fundamentals for derivatives exchange is having the financial engineering knowledge, which obviously you have, and your other co-founder, and having the ability to develop back-end and front-end systems which scale to the levels that accommodate serious spikes in traffic, which can happen in high volatility, and being able to margin the assets in all the different accounts, sub-second basically, in order to perform all the necessary risk management stuff. However, there is a third core which I would consider to be important, which is like crypto knowledge and having the knowledge and experience in handling crypto assets and just dealing with the crypto markets in general. So what got you guys into crypto with these backgrounds, and what do you have like experience in dealing with these crypto specific issues like Forex and other kind of things, which are only things that happen in our market in crypto?
So yes, you rightly said, as long these things are important, financial engineering super important, technology super important, but you need to, crypto is the underlying of all this, and it's a bread and butter of all this. So you need to not only understand but also build for that technology. So in our team, actually, one of the first persons who has been working with us from day one, and also very close to the entire founding team, there's this person by the name of Shraman, and he has been a core Bitcoin person since 2012. So that also kind of completes our team with regard to understanding of crypto and blockchain. Now, beyond that, we've been looking at the markets, and we've been personally, each one of us has been in crypto since early 2017. We were actually quite interested in what's happening on Ethereum, and we were looking at multiple solutions on for banks on what can be done using Ethereum. And it was then that there was this huge boom of capital raising, right? Everyone remembers the 2017 ICO boom. And uh, at that time I realized, and along with my friends, that look, if people need to hedge this exposure, markets are going very fast, they will come off at one point, and there needs to be places where people can go and hedge these risks. The amount of Ethereum that is being sold, I'm sorry, the amount of Ethereum that is being accumulated and the amount of money that is being raised, people need to find a way to able to manage their risk, and there were no solutions available back in 2017. There was only BitMEX, which was one legitimate platform that only had Bitcoin futures, and Ethereum futures came in late 2018, and they are also Bitcoin contos, so they just transfer your risks from Bitcoin to Ethereum. You still have Ethereum, Bitcoin dollar risk to take care of. So there was these gaps. There were a lot of gaps that we saw in the markets, and that's when we realized that, look, why don't we go and solve this problem? And that is when we decided to build Delta, and we've been in business since August of 2018, so about 20 months now. So yeah, it's been a great journey. We've been continuously adding more and more products, and I still feel that we are very early stages of derivatives and cryptos. There's just a ton of products that we need to build. There's a ton of risk that there are no products available to manage that, like interest rate risks, like risks on volatility, and we as a platform, our effort is to continuously provide solutions for that.
Yeah, definitely. So for users that want to sign up and make an account, do you have any KYC requirements or any restrictions for those who aren't providing documents?
So we don't have any KYC requirement on our platform. Anybody can come and register on the platform. And there are certain countries that we don't allow registrations from, which are, which is very much in line with the market. So countries, US is not allowed. Then some countries in the Middle East, Syria, Iran, they are not allowed. So yeah, there are certain countries that we block registrations from. Other than that, there is no KYC. You can come, register, and start trading. You can literally make an account in 30 seconds and send your money, start get everything is set for you to trade in less than 30 minutes.
Do you have any restrictions on withdrawal amount or anything like that?
So yes, and there is a limit of 2 Bitcoin per day to withdraw. You can of course withdraw more than that, but then you will have to provide some sort of verification. Uh, so if you want to withdraw more than 2 Bitcoins a day, then we will ask you for basic verification. If you want to withdraw less than that, then there is no verification required.
Okay, that makes sense. So let's go back to the tech details. So you mentioned that you have some team members that have experience building products that scale on a flexible tech
Yes.
stack, and a lot of users they are especially irritated with BitMEX and other platforms which have failed to scale. And you can see in BitMEX's market share, it's plummeted over the past year, 2 years,
Yes.
precisely because there's new competitors on the market, and users are so frustrated with the BitMEX order rejection and other issues that they have moved over to new exchanges. So could you tell us a bit about the architecture of your tech stack, what languages, database types you're using, and how you are managing to scale in the manner that you have described?
So, yes, like you rightly said, scalability is a big challenge. We've, everybody knows about the issues that happened at BitMEX, and I think it has improved now. 1 year back, there was a lot more problems. If one order book went down, then the entire platform went down. So if one order book was overloaded on BitMEX, the entire platform was overloaded. Now I think they have rectified that. We at Delta Exchange have taken care of this since the beginning. If there is load on one order book, then other order books should work seamlessly. If one product is busy, that should not mean that other products are busy. Same is the architecture that we have done when it comes to adding customers. The system scales nicely and linearly. As you add more customers, there is hardly any clogging. We use Erlang, which is a lot more sophisticated framework and language to build these kind of systems. It helps in very fast communication, and that is basically the language, the tech stack, that is the bread and butter of our risk engine and the matching engine, the trading engine.
You got cut off again.
I think my hands are a little sweaty on this push to talk. So sorry about this, guys.
That's fine.
Keep cutting off towards the end of the sentence. Yeah. So I was saying, Erlang, that's a language that we use. It's very good for fast messaging exchanges, fast communication, and that's a primary. You can call it the bread and butter of our trading engine and the risk engine.
Yeah, I think that's a decent. This is also what Deribit uses, and their performance tends to be quite robust in the face of spikes in volatility and stuff. So Erlang is a good choice. Do you have any benchmarks you can share with us in terms of orders per second or matches per second or anything like that?
Yes. So we have about we at 50 products, we can easily do updates of about 15,000 orders per second. Okay, so that would give you basically less than just 1 second, about 0.06 milliseconds per order update. And this is when you are doing about 50 products. Right now we only have 30 products live, and we also have our when we give batch edits to customers, we are giving about 25 batch edits per batch. But if there are any market makers that want higher limits on batch edits, we are also open to doing that, and that does not put any significant strain on our engine. So usually you see that when there is a bigger order update size or a bigger batch update, systems tend to slow down. But even at about 100 order updates per batch, we won't have any kind of issues in terms of the latency that system accrues. There was a post that was done by Deribit, if I'm not wrong, about a year back on how fast their trading engines are and probably the best in the market. And I think if I am able to recollect correctly, they set a benchmark of about 10 to 20 milliseconds for the entire cycle, which was about basically risk managing the entire order. We are very confident of achieving better latency than that. And in some time, we do plan to actually do that test and publish it, that how our systems are able to handle much higher load at much lower latency and for a bunch of altcoins. And this is not something that we have done overnight. This is take time for us to build. So we've spent good 1 year just trying to understand this problem and to solve it. In times of stress, I mean in times when the volumes are high, things like that happened on May 12th and May 13th, our trading engine is able to navigate those very easily without much load. So The recent fall that happened on March 12th and 13th, we were able to navigate latency without any significant latency on our platform, whereas a bunch of other platforms in the market had significant issues that day.
So just to confirm, so you said that there's 15,000 orders per second, and the latency would be 0.06 milliseconds. Was that what you said?
Yes, on the order update.
Okay, and so your users didn't experience any kind of backlog or any kind of disturbances in their experience on the platform during the volatility and volume spikes on March 12th, 13th?
So on March 12th and 13th, we did not have any kind of these issues. There are, whatever issues that happened that day, and usually that happen in such cases, are rarely on the back end, are usually on the front end. The thing is, when you are sending that much information on the front end, it tends to get choked, particularly for an exchange like us, where we are sending about 50 order books continuously, where we are sending tickers on the top, where it's continuously updating. So in those times, we recommend people to, we are building a light mode. We will recommend people to switch to light mode. That look, if your front end is getting choked or if your front end is getting slow, then use the light mode. It will basically only refresh the order book that you are currently looking at. And it will try to save data through that. But yeah, on the backend side, there was no problem at all.
And where do you guys run the servers? If there's, for example, certain algorithmic traders that want to minimize their latency, do
Absolutely.
you run it on a cloud?
We run it on the cloud and in Ireland. So that is where our servers are hosted. And yeah, there are requests that we get.
AWS?
Yes.
Okay, so AWS West Ireland, Dublin?
Yes. Yes. So we
okay,
often
that's
get
just like
requests.
business knowledge.
That is, I think it's the same for BitMEX and Deribit both, right?
I think Deribit just recently moved their server to London, technically, and FTX runs theirs in Japan, if I recall correctly. But I think people are used to AWS West in general.
Yes. And yeah, we often get requests from people who want to do, high frequency trading for co-locating servers. And we are also looking to provide that infra. Currently, whatever we can do in terms of helping them with regards to getting as low latency as possible. So we are also working towards that.
Yeah, because that could be a bottleneck. So if you've got 0.06 millisecond local latency, it might translate to something different within the cloud context, right?
Yes. So that's the thing, right? I mean, if you are part of the latency is also because of the communication that happens over the net. So you want to keep as low time. Once the order is received at the periphery of the exchange, then it's fine. But you want to reduce the time that you want to get to on the periphery of the exchange. That is where
Exactly.
we are also looking to help people.
All right, so let's shift to asset custody. Could you tell us, you've already mentioned it before that you're providing deposit and withdrawal via Bitcoin, and then people can convert that Bitcoin to USDC or to
Yes.
Tether and then use that as margin, or just holding it because they want to hold it. Could you tell us a bit about your model for the storage of users' crypto? Because there are obviously some exchanges that have been hacked in the past, and it results in some bad experiences for users. So, what kind of peace of mind can you give to users on Delta Exchange that they are, hosting or they're holding their assets in a safe manner?
Sure. So, first of all our assets are held in cold wallet, and we do withdrawals only once a day. We do withdrawals after a manual supervision. Every withdrawal is basically looked at and checked by our team, and only founders are allowed to basically process any kind of withdrawal. Even after taking all these precautions, we also, on top of that, we do a multi-signature signing. So the basically 2 out of 3 founders need to be present at any time to process any kind of withdrawals. So I think these things have started to become pretty standard across derivative exchanges, and we also follow the same practice. So everything is in cold. We bring it up front when we have to process withdrawals, and then we process it through. Even when we are bringing it to a um, highway wallet for a short period of time, that is done on a custodian's wallet. So we use BitGo as a custodian for that part, and we transfer through that. So in that regard, we did not want to take any chances with the security. Funds are of paramount importance, and they need to be kept super secure. We have taken all.
Yeah, you got disconnected again.
Yeah, so I was saying, fund security is of paramount importance, and we have taken all the steps to ensure that just having funds in cold wallet, having multi-signature, having withdrawals once a day already provides multiple level of security, and then it is all manually approved. It is not a system driven. There is no key on system anywhere, so there is no chance of keys getting hacked or being compromised. Uh, Also, I want to point out here, and this is just, I think most of your users will be aware of it, and most because a lot of them are seasoned traders, but even otherwise, see, the risk of a derivative exchange in terms of losing funds is naturally a little low as compared to spot exchanges. So that is because derivative exchanges enjoy a little bit of luxury in terms of being able to put everything in cold wallet. Secondly, and more importantly, everything is on margin, right? So the value of trading that happens and the value of funds, there is a factor there. So what we have in custody is only the margin. So if there is a billion.
Oh, it disconnected again.
Okay, I'll be a little more conscious on this one. Yeah. So I
No
was
problem.
so I was saying that the value of funds in custody, we only have margin funds in custody, right? And because there is leverage on the platform, if a trade of $1 billion goes through, then the margin that you have is probably 1/10 of that. Let's say the average leverage is around 10. Whereas for a spot exchange, this will not be a case. If a $1 billion of trading has gone through, then a $1 billion of assets must have been in custody. Only then they could have been exchanged. So there is a natural advantage as well, and on top of that, we use all the like super, like I said, cold wallet, multi-signature, and all those protections to make sure that the funds are super safe.
Yeah, and I think that's why most people here are actively trading on futures because of that reduced counterparty risk that traders have by only needing to put down a fraction of the position size and margin. I think that's one of the more attractive features of futures.
Yes.
But it sounds like you have a pretty secure setup. However, the downside is that you are processing withdrawals only once per day, which for people that are trading, with various arbitrage strategies and such, they might have time-sensitive withdrawal needs. Have you thought about this and how to mitigate this?
Yes. So you have rightly pointed out that, look, this is at a bit of a cost to the customer. That withdrawals are only once a day, and they have to, remember it as well. So now we are also thinking of making sessions. That, look, we'll make 3 sessions out of a day, make an 8-hour session, and once we are doing these sessions, then at the end of every session, we can allow people to withdraw their funds or place a withdrawal request. It will basically mean that we will process withdrawals 3 times a day, so the time window will become 1/3. It will also introduce a bunch of other things on the platform. For example, your UPL, while we are bringing sessions, we are also thinking how can we give advantage to people in terms of just the way traditional exchanges do. They mark to market your position. They let you basically
It disconnected again.
Yes. So I was saying that we are doing sessions that will help reduce this time to 1/3. And when we do these sessions, we will also bring the mark to market, concept, where we basically give ability to people, those who want that. Look, your UPL can be realized every 8 hours, and your position will be marked to the session closing price.
And how is it currently done? Just by end of day price you're marking to market, or?
So currently, like most derivative exchanges, right, we don't really mark the position. So your entry, I mean, there is a mark price and you have a UPL available, but we don't make the UPL to RPL continuously. So the difference between traditional exchanges and crypto exchanges would be, on a traditional exchange, every day at the end of day, your entry price is updated, right? So at the end of the day, there is a settlement price that is generated, and you are either given the losses for that day or given the profits for that day, and then your entry price is changed. This helps you basically continuously skim the profits from the table. On derivative exchanges, what we have seen in crypto and the way we do it and way a lot of others have been doing it is basically keep the entry price same. So keep the entire UPL in the position, which is also, in my opinion, not very good for a lot of seasoned traders, because you want to be able to withdraw your, realize your PNL as much as possible. And of course, this realization is at no cost. When this thing happens, there is no commission, just to be clear.
Yeah, I think BitMEX and OKX, I think they have it set up so that they basically, once there's a funding event, or I think once a day or so, they do some kind of marking where the entry price adjusts. But you're right, for the most part.
Deribit
as well, yeah. So yeah, it's a little bit mixed, but I could see how some would want to withdraw out UPL. What about fiat support? Is there any plans to add USD or Euro or anything else?
So we have received a few requests for fiat, and directly we don't plan to provide fiat support as of now. What we are going to do, though, is integrate with partners who provide an ability to convert fiat into crypto, and we will do that by basically integrating with those partners. So you will be able to use your credit card to buy crypto, but then customer will realize that this is done through through an API of the third party, and then you have to basically register with them and do whatever requirements. If they have any of KYC, you have to complete those. It's just that you could do it here, and once that transfer is complete, money will start reflect, or crypto will start reflecting in your Delta's wallet. But you will be.
You got disconnected. It's showing that your speaker's off. Yeah.
So it's more like using somebody else's software development SDK, and we don't have plans to, like I said, no direct fiat support.
Yeah, I mean, there's a lot of regulatory questions that pop up with that, but that's one area where there's not many actual fiat-based crypto derivatives products. You need to trade with CME or
Yes.
BAC to get this kind of offering. So some people are interested in this.
So yes, that is definitely an area of it's an interesting area. It's a problem for that you want to solve for your customers, but at the same time, it's a trade-off, because once you get into the realm of fiat, then there is a whole new set of compliance that you have to abide with, and it's a lot more complex than the compliance that the spot exchanges have to do, because now you are dealing with both derivatives and with fiat. So the whole set of derivatives regulation and the fiat regulation might start to apply on you for different countries. So you have to be very careful when offering these, and this has to be done country by country. So at this point in time, I think it is a lot easier to partner with someone who's already solving this problem and who's solving this problem good. We want to be solving the crypto derivatives problem. That, look, how do we provide the best crypto derivatives experience? It's a bit of a bummer for users to get to crypto realm, but yeah, I think. In the balance of like, it's a bit of a trade-off, I know, but this is the way things stand for now and some time.
Yeah, and in addition to the regulated exchanges, there's also FTX and BTSC. They offer fiat support, where you can use fiat or crypto collateral, multiple forms of collateral to back the positions on their platforms. So there's, the market's growing in different directions and stuff. So
Yes. So yes,
um,
yeah, you were.
yeah, no, go ahead and finish, because I was going to pivot to products section.
No, I had nothing particular to add there. Like I said, we understand the pain point. We are aware of it, and we are seeing how can we solve it with minimum friction. But yeah, on a priority order wise, our priority at this point in time is to provide better derivative products on crypto derivatives, and then after that, go on to provide a direct fiat support. Of course, indirect fiat support will provide much before that, like partnering with someone else who is already providing crypto to fiat, conversions.
Yeah, I think that makes sense, especially when there are stablecoin opportunities for people that want to get at least a very, very high correlation towards fiat experience. So, um, and so that leads us to the products that you guys are offering. We've already talked a little bit about this. One of the advantages I think that your exchange, Delta Exchange, is offering is that instead of just providing contracts based on the high liquidity top cryptocurrencies, you're also offering quite a number of mid tier, lower tier kind of crypto contracts. Can you tell us a bit about the variety of underlyings that you are offering outside of the top cryptos that users can then provide either USDT or USDC to trade?
Yes. So, like I said earlier, we have about 30 to 32 coins that are listed on our platform, which you can trade with leverage. Most of them are also at a pretty high leverage. So, we were the first platform to offer Ethereum at 100 times leverage. We offered Ripple at 50 times leverage. BCH is at 100 times leverage. And these contracts are available on most derivative exchanges, but there's a bunch of other contracts that are available on Delta Exchange, particularly on medium to small market cap coins, which are not available anywhere else. For example, we were the only exchange to offer Tezos.
You got disconnected at Tezos.
Yes, I was saying we have had Tezos and Atom futures listed with us for over 1 year now. We have BAT listed with us. We have WRX, which is a coin that recently had IEO on Binance. That listed with us. We have XAUT listed with us. We have REN listed with us. There's an event upcoming in REN. So we have a bunch of these smaller names which are not available anywhere else. KNC is listed with us. I think was listed with us till 27th of March. Then the future has expired. We are thinking of launching a June future on it. FTM, which is again a staking coin, that is listed with us. So there's a bunch of smaller names and mid-tier names that are listed with us. And that is what we have continuously done. We have brought more and more coins for leverage trading to the market. So we offered BNB perpetual swaps as early as December of 2018. At that time, nobody was talking about leverage on altcoins beyond top 5, 6 names, which were listed on BitMEX. And in continuation with that tradition, we were also the first exchange to bring Leo futures. We listed Leo perpetual swaps within a week of Bitfinex opening up Leo on spot trading. And that again got us a lot of attention. So yeah, and we are very receptive to any ideas. So if there's community that wants us to list a coin, if we see that it has good volumes on the underlying, if we see that it's frequently traded on underlying, then and if there is good demand for it, we are very open to ideas and we'll be very prompt in listing any coin. So we get a lot of these requests on Twitter, Telegram, and we are very open to it. If you guys want to trade something, and just ping us on Twitter, say that look, we want to trade this coin on leverage. If there's enough demand for it, and if it's listed on a good spot exchange with good liquidity, we will launch it within 2 days maximum.
Yeah, that's I like that you guys are running Monero futures, XMR. Some of us are fans of
Yes.
XMR, and
Monero has
that's
been.
good.
Yeah, Monero has been with us. We have been listed. Monero futures have been listed for like 1.5 years now. So yeah, 1 year now, quite a long time.
And for these low to mid tier altcoin indices, you are running USDT, right? Because these don't really have USD very robust USD markets, but they do have robust Tether quoted markets. Is that right?
So wherever a good, so USD is not a question for these small coins, right? Because they don't have a good fiat market available. So that test fails at the get-go itself. Wherever there is a good USDT market available, we prefer to give an altcoin USDT pairing. If that is also not available, then we look if there is a good altcoin Bitcoin pairing available, and that is why in the beginning, like I said, we have about 15 to 16 contracts that settle on Bitcoin. So a lot of these coins are traded against Bitcoin. So for example, BNB, when we had first opened it, we had opened it as a BNB BTC pair. Similarly, REN is a BTC pair, BAT is a BTC pair. A bunch of these are BTC pairs. If there is something which is liquid on USDT, for example, Tezos became very liquid later part of last year. Same with Atom, Link. Then yes, we are open to offering both. So for example, Link, we have Link BTC as well, and we have Link USDT as well. You can trade either one of these. We had also launched a Link OTC contract where you could trade 25,000 Link in a single shot. So it was so popular at one point in time that we started to get demand for bigger trades. So we also launched a OTC window where people could trade in larger size. So yeah, like I said, the contract definition varies, and we're very wherever there is good liquidity on the underlying, whatever pair, we're happy to offer that pair on the leverage trading side.
And when users are taking positions in the various contracts, is the margining performed across all the contracts at the same time, or is it per contract?
So at this point in time, there is a margin is per contract. So what you can do, you will have to individually margin for every contract. You can, of course, we have a feature for auto margin top up. So you can keep your position at a higher margin, and if you have balance, it will keep taking margin away from your account. And it will behave like cross, but we don't have a pure play cross as of now. It is in the pipeline and it should be delivered within 45 days, 1.5 months from here on. But yeah, as of now, all the contracts are margined on the underlying currency. Underlying is the quoting currency, or unless it's a Quanto, and they are margined in individually. They are not margined cross.
Okay, and the other interesting product that I noticed you guys offer are these, and you mentioned it also earlier, these move contracts, which FTX is another exchange that runs these, and basically it replicates a straddle options payoff where you're simultaneously long put and call options at the money, and uh, basically it pays out on different periods based on how many points, how many dollars Bitcoin or Ethereum has moved, because you're running contracts on both Bitcoin and Ethereum. How has your experience been with these, and is it difficult to attract liquidity? Because that's often the case with a lot of these more innovative products.
So, move contracts are, like you said, they are basically options play. They are a way for people to easily trade volatility. There are a lot of traders who don't want to, go into complex Greeks trading and want to keep simple. So, it's a very simple and a easy product to understand. It's like you said, basically you are long at the money call and put. Right now we have a daily maturity. So basically you are long 1 day maturity, and we get two-way flows in it. So we've got a lot of customers who come and short these contracts because they feel that market is overestimating where how much Bitcoin can move. At other times, we have seen that people buy these contracts because primarily.
You got
Yes,
disconnected.
primarily because market is so volatile these days, right? So because of the high volatility in the market, there is good two-way flow in these contracts. And right now we only offer daily. We are soon to offer weekly maturities and monthly and quarterly maturities, which I think will be very interesting because it will be longer dated maturities. And those who really understand options trading can take a good advantage of longer dated options and look to eat premiums on those. As far as bringing liquidity in these products is concerned, we continuously are. So there are two things here, right? There are a bunch of players who understand these products. We are encouraging them to come and make markets on our platform to get trade these more and more. Of course, we have tied up with market makers to provide liquidity, but we are also exciting professional users to act as market makers and asking them to trade these products. At the same time, we are also encouraging retail traders to basically trade in these contracts because they provide these kind of markets. These products are really exciting for people. So, and we've seen good takeoff. We're also thinking of launching a BCH move, and there's halving due in 2 weeks. So yeah, that can be a pretty interesting product. We are thinking of doing a weekly move on BCH.
And you're running some pretty exotic products relative to the general derivatives market in crypto. Do you provide any in-house liquidity to ensure that there is constantly a continuous quote, like either your own company or some sister company that is providing liquidity to ensure that there's always a bid and offer?
So we do have, we don't have in-house market making, but we do have, partner market makers, designated market makers who have worked with us in the past, or I would say who have worked with us since the beginning to provide liquidity in these contracts. And you have to understand, like you said, a lot of products on Delta Exchange are unique and are quite exotic. So a bunch of these altcoins, um, they were not available on leverage anywhere, when we started to offer them. Similarly, for move contracts, for a bunch of other contracts, these contracts are not available anywhere. So we work closely with our designated market makers to provide liquidity in these. And because of the time that we have spent in equity markets and other markets, we have close connections with people who are comfortable making markets in any asset class. So they have since the beginning helped us in they have basically been quoting on or providing a two-way quote on our markets. But they are very open to getting more and more market makers on the platform, and even professional traders, people who want to act as market makers, provide a quote on the order book. We encourage people to come and trade these products. A lot of these can be very exciting and good money making opportunities if you are looking to do professional, or if you are looking to make markets in these things. For example, just trying to earn funding on some of these altcoins can be very exciting. Similarly,
Yeah, some of them are trading at pretty decent premiums, which lead to really good funding for those who are short.
absolutely. So a bunch of these altcoins, they are they're highly momentum driven. So whenever there's a move in these altcoins, they're very sharp. At those times, there's a very good opportunity to take a position, hedge yourself, and earn funding. And we continuously encourage big traders and professional traders to get into these trades. And even on Bitcoin, there is so much opportunity. So just if you look at premiums, the difference of premium between June future and September future, or a couple of days back between June and March, there are a bunch of opportunities out there for professional traders to make easy 1.5-2% over risk-free 1.5-2% over period of 2 to 3 weeks time frame.
Absolutely, and so you guys are in a pretty competitive market. You have some advantage with these product differential with low to mid tier altcoins contracts. But how about on the fee side of things? Because just looking at Bitcoin dollar derivatives, your volume is a bit on the lower side of the rest of the other exchanges. What sort of fees are you charging users, and is there a volume discount and a difference between the maker and taker side?
So the fee is pretty much in line with everyone else in the market. 7.5 basis points for takers, negative 2.5 for makers, which means that there's a maker rebate. At the same time, we don't have any VIP tiers as of now, but we are bringing some sort of cashbacks. So we have what we call these points that we give when you are trading, and these are fee credits. And later on, you can use those fee credits to offset any fees that you would have paid. So that again introduces, the more you trade, the more fee credits you accrue, and the more future discount you get. So it basically is not a tiered structure, but it's a linear structure of offering discounts to those who are high volume traders. And we keep experimenting with these things. So for example, right now, there is zero fee on the platform. We are running a promotion. There is no fee on the platform for certain days. So we do keep offering promotions as well. We do keep offering fee credits and other discounts as well. We often run deposit bonuses to encourage people to come and try our exchange. And these are the things that we often keep doing. Usually we try to have at least 1 or 2 promotions going on the platform for users to take advantage of, either on the fee side or on the deposit bonus side.
So given that you have different assets on the platform, you're charging fees sometimes in Bitcoin, sometimes in Tether, sometimes USDC. These fee credits based on volume, are they USD based or does it vary?
So whatever asset you trade, right? Whatever settling asset you have. So for example, let's say you are trading Bitcoin futures or Bitcoin perpetual swap. The fee is 7.5 basis point, and it's margined and settled in Bitcoin. And the fee is also in Bitcoin. And the credits will also be on the Bitcoin wallet. Similarly, if you trade XAUT, which is a USDT pairing. So if you trade that, then you will get USDT fee credits. So your fee credits will keep increasing against every wallet. And whatever you have traded, in that only you will get fee credits.
And you have also a referral program so that users who sign up are able to refer their friends or run affiliate program?
Yes, we do have a referral program. We have a referral program for all the users, all our customers. Anyone they refer to, they will get a percentage share of the fee for the first 6 months, and then a fixed share of their fee for the lifetime. And for the affiliates, we are coming out with a much more aggressive referral program. Right now, for everyone, we offer a 15% for first 6 months and then 10% lifelong. We are also coming up with a special program for affiliates and people who have a strong traders who have a big following, who want to onboard more and more new traders on our platform. We are running programs where we offer them a higher, referral commission on the front end side of things.
Yeah, I think that's good because this industry is heavily driven by referrals and affiliates. In terms of the order types that you are offering in the markets, I saw you've got the standard, limit market and stop orders, and you have also a trailing stop.
Yes.
Are there any other interesting order types, or like do you have conditional orders where you can do one that cancels the other? So you have a stop loss and a take profit, and if one of them gets hit, then it cancels the other.
So we call this bracket order. Bracket order is something which is trailing, which is a stop loss and a take profit order put together, and one cancels another. So if you have a position and if your stop is hit, then your take profit will get cancelled. If your take profit is hit, then your stop will get cancelled. We have had this on the platform for about 1 year now. Recently, we have discontinued it because we introduced reduce only orders, and now we are bringing, and that's why we had to, basically there can be a conflict between bracket orders and reduce only. So we are going to reintroduce bracket orders in a fashion that they don't conflict with reduce only. But yeah, to go over order types, we have all the types of orders which a sophisticated trader would need, all kind of time in force, GTC, IOC, FOK. We have stop loss, trailing stop loss, of course. Take profit orders are rather straightforward. Then we don't have hidden orders. That is something that we are bringing, which I think a lot of big traders will need. Like I said, we are also reintroducing conditional orders, and there are standard reduce only orders which only reduce your position. Those things are, of course, present on the platform.
And how about sub accounts? There are some people that like to split their account into many, or some firms even that have traders that are under them that they would like to set in sub accounts. Do you have sub accounts?
So as of now, sub account feature is not available on the platform. This is again something that we have been getting a lot of demand for, and I think it's particularly quite useful when you're running trading strategies, right? One of your strategies is saying long, another one is saying short, and you want to have two separate positions, not necessarily offsetting each other. So in that regard, sub account can be quite useful, and we are working on it. Again, there is a timeline to it. It will take about 2 months to be live fully on the platform, but as of now, it's not available.
And how about if people want to try the platform features risk-free? Do you have like a sandbox testnet platform that users can get a taste on?
Yes, of course. So we have a testnet. It's very simple, testnet.delta.exchange. Our website is also quite simple, delta.exchange. So yes, testnet.delta.exchange is where you can go and register. It will give you some dummy cash. You can trade futures there. You can trade perpetual swaps. You also have move contracts there. And, with some dummy cash, you can try your hands out on the platform, get a sense of it, how conversion works, how, everything is working, how the interface is, how the API is. Even an API package is available for the testnet. So yeah, all those things are in place for users to get started on the platform.
And API wise, you have, I saw you got REST and WebSocket. Do you have Fix API as well?
So Fix, we don't as of now. Again, this is something that a lot of, traders, particularly who come from traditional markets background, request for. And this is again something that is in the pipeline. But yeah, as of now, we have a socket implementation and we have REST implementation. Fix we don't have.
There was a small thing. I don't know if I couldn't find the right endpoint, but are you displaying open interest in the API at all? I couldn't find the REST endpoint for it.
So open interest endpoint we don't have as of now. Again, we have given things which are. It's just that it's not been a priority, and the reason for that has been that market our volumes are quite low as compared to other big derivative exchanges, right? So open interest on our platform gives information only about our platform. So we haven't had much demand for that endpoint, and that's why we haven't aggressively gone out there to provide that. But yeah, we will definitely provide that. It's a useful piece of information, particularly on the some of the alts that we have. So we are also, it will be available in some time. We are also aware of it, and we are looking to provide it.
Yeah, I mean, it's just one of those. I mean, because I scrape a lot of the
Basic.
data from all kinds of different exchanges, so it's interesting to be able to compare volume versus open interest and stuff like that.
Yeah, it's one of those things, right? It's one of those things that you just expect to be there. It's just that there is
Yeah,
usually a elongated pipeline, so we have to make trade-offs. And it's you are absolutely right in saying that. Look, it's a standard. Why haven't you given that? So we are aware of it. We will provide it. It's just that we've been busy with providing other features on the platform. Although that brings me to a point, we have an analytics page where you can track data from a bunch of other exchanges. So we realize that when people look for analytics, people look for data, and we want to provide them a place where they can look at the shape of derivatives market. So on our analytics platform, we have integrated BitMEX data, we have integrated Bitfinex data, Deribit data, and you can see Bitfinex long short ratio. You can see the borrow rate for Bitcoin on Bitfinex. Yeah, you can see how is the open interest for Bitcoin on BitMEX. We are also, you can see how many liquidations have happened. All these things are available on our analytics platform. And a bunch of our traders really like that platform because that gives you very good insights on how, whenever there's a big market move, it can tell you where the action has been, how has the open interest changed, how has the long short ratio changed, how has the borrow rate changed, and other insights on that people look on rates and derivatives side.
yeah, definitely. The analytics piece I think is key, not just for the overall market, but also that uh, you're able to, because your exchange is generating data that's worth analyzing as well, not just the open interest piece, but also like liquidations and perpetual funding rates and this and that. So
Yes. So, by the way, that also brings me to the point. So, one of two things that we are going to add on our endpoints is OI and also our own liquidations data. And we've seen a lot of demand for our liquidations data on altcoins because, yeah, those are a lot of them are listed only with us. So, yeah, those two things that are going to be, they are going to be available soon. Anything that is pressing is, of course, available. Funding rates are imperative. So, they are available. Price, volume, order placements, all those things are quite sorted. We have a good documentation available. We have clients available for people to go and trade and experiment with the API.
yeah, you may have noticed that we have a bot here in TeamSpeak and also on Telegram, which is spitting out the big liquidations that are happening on the large exchanges. As traders find it useful to grab this data for sure.
Yes,
Um,
that's the most exciting data when the market is moving, right? I mean, OI data and how is that changing and how fast is the position getting liquidated. So that is very exciting data to look at.
Definitely. So let's pivot now to the details of your risk management model. This is more of the interesting financial engineering aspects. Could you tell us a bit about overall what the process is for liquidations in the market? Because in futures or derivatives in general, this is a zero sum game you are creating between users who are long, users who are short. For every long, there's always an opposite short, which you have to balance then the margin requirements for the users on both sides. You have to make sure that there's liquidity in the market to fill liquidations which happen when the user is bankrupt. So could you tell us a bit about, especially for these altcoins which are quite volatile, how are you managing the risk in this? So larger positions, they pose a larger risk to the system. Are you requiring more margin for them? And how have you designed your mark price formula to account for um, what we call scam wicks, which can happen in the market sometimes? If users in the less liquid markets, there's a wick that happens, which doesn't really happen in a lot of the market. So how are you helping to protect against these sort of manipulation risks that can happen to the market?
Yes. So there are a couple of questions in this one question, and I'll take them one by one. The three aspects that you've pointed are one, how do we liquidate? How does liquidation work? What happens when positions go into liquidation? How do we maintain sanctity of OI? That net OI should always be zero. The second is how do we manage altcoins which are trading, which are highly volatile? Do we control leverage on that, and what's the process there? And the third thing is about stability of mark price. How is mark price generated, index generated, and how do we ensure that there are no scam wicks on the mark price that can liquidate people? Of course, that discussion will also come to price bands and volume.
Yeah, you got cut off at price bands.
Yes. So let me take the first question. Let me take the first part of the question first. Now, whenever there is a so it goes to say that for every open position which is long, there is a equal amount of short that is available on the platform, right? That's just a standard. That is the basic of any derivative exchanges. If that sanctity is not true on the exchange, then there is a problem, because then the exchange has a net risk. So first of all, that continuously needs to be checked on any derivative exchange for any contract, and that our systems are continuously doing. That look, on all products, net OI should be zero at any given time. Now, after that, there is a mark price which is used to check whether any party is in liquidation. Mark price is just like any other exchange. We derive a mark price using the index price and the fair basis. And once anybody gets liquidated on the platform, we don't just go and dump the entire position on. We don't do the entire liquidation at one go. We basically liquidate partially. And when we liquidate partially, we basically liquidate a chunk of position to make sure that if this selling this chunk of position will release enough margin for the balance of position. So you want to be liquidating as little positions as possible, because of course you are putting pressure on the price, or you are squeezing the price, which you don't want. So that goes to say that when we have margin requirements on the platform, they also increase with position size. So as you increase your position size, you are required to put more and more margin. And we increase these margin requirements linearly. We don't do stepwise increments. So a bunch of...
I think that's the best way to do it, because big banks and others, they do stepwise, and I don't think that makes sense. Linear is the best way to go.
Yes, and because of stepwise, what happens is there's a sharp jump for the participants. That okay, the minute you have 100 Bitcoin position, you require certain margin. The minute you have 101 Bitcoin position, your margin requirement suddenly goes up on the entire position. Now that opens up, a lot of. It's easier to manage for the system, but it's penalizing the customers. So we do it. We have a base step, and then there is a linear and a gradual increase in margin as you increase your position size. And in that, there is no particular. It's very transparent to the users. Those who have a bigger position have to pay higher margin. And then when system starts to liquidate you as well, or anybody, what it does, it tries to liquidate only as much so that you have enough margin for the balance of positions. Now, liquidations, how do they happen? So they happen in open order book. What that means is liquidation engine will take over your position when it is in liquidation and hang it and try to square off in the open market. This, according to us, is the best way to liquidate positions, because it...
You got disconnected.
Yes, so this provides other participants an opportunity to basically take over any liquidations that are happening, and if there is any opportunistic trading that can come out of that. So liquidations are happening in the order book, open order book, and if typically what you want is you want your liquidation engine to be faster than the market. That look, market is moving fast. You have certain maintenance margin. You have a liquidation price, and after that you have a certain buffer that is available for you to liquidate a certain position. You hang it in the open market, open order book, and what you want is that the liquidation is consumed by bids and offers that are provided by traders and market makers in the book. Now, it is quite possible that the price moves really fast, and the position is not being able to liquidate it in the order book. In that case, then liquidation engine will basically hand over the position to the insurance fund, which will basically compensate the position and provide more margin for the position. So it's a standard way of basically insurance fund taking more losses than so trader has provided some maintenance margin. Current losses are not enough to compensate for that margin. The balance is taken from insurance fund, and that
But
is
this is
how.
still, just to clarify, Pankaj, so when you are using the insurance fund, you're still filling the order in the book, but you're just using insurance funds to aggress the price?
Yes, so we keep providing more and more money to the insurance fund through the insurance fund to the position to be able to fill in the market.
Okay.
There will be a point, of course, when let's say there are not enough bids in the order book. Let's say the insurance fund also gets wiped out doing this. In those scenarios, then there will be a deleveraging event, which is the ADL as we famously or infamously know it, which is basically saying that look, now there is the position is still open. There's not enough money with the counterparty or the fund, and now we have to square off the position. So then we look at who are the parties on the opposite side. We rank them using their priority on who has more profits and who has a higher leverage. We get a composite ranking, and those who are on the higher ADL rank get deleveraged, or some part of their position gets trimmed off. Note that not all of it, some part, whatever is required to cover the to make the net OI zero again once the position that is in bankruptcy is liquidated. The ranking for ADL is a very standard way of calculating in the markets. It's more or less same across exchanges. So that is pretty standard. I don't think I need to go into detail on that. But you were
No,
saying something.
that's something that people are mostly used to as it is. So how often do these ADL events happen, and how is the insurance fund balances? What's the contribution to the balances? Do you charge a fee on liquidation, or do you just, if the liquidation um, is in positive, then it funds the insurance fund, or how does that work?
So if the liquidate, we don't charge a fee on liquidations. A fee on liquidations is basically the same that you lose your maintenance margin. And if there's any money, so whenever there's a liquidation, if the money is left, it goes towards building insurance fund. And if there is a liquidation that cannot be done via traders fund, then insurance fund is debited to liquidate, just like I explained. So basically, it's a fund that is continuously being built by liquidations, and it's a fund that is continuously being debited by any kind of bankruptcies.
And how large is the insurance fund currently?
So right now our insurance fund is about $150,000, and we've only very recently so earlier there was some incidence of ADL towards till the middle of last year. Now then we realized that we need to provide an insurance fund. Earlier we were charging very little amount on liquidations, and then we built this mechanics of insurance fund, and we also put some of our own money into insurance fund to seed it. So currently it stands at about $150,000.
And in the overall risk system, because you are using ADL to maintain the OI harmony, um, are you also able to then guarantee that users will not go into a negative balance on their account in order to maintain this?
So yeah, we guarantee that users will not go into. So like I said, we are a non-KYC platform, right? So anyone who is not able to furnish their margin or their margin is not sufficient to cover their losses, on any liquidated positions. We don't give them negative balance that when they put money later on, it will get debited. So that system we don't have. You basically are putting up certain amount of money for a certain position, and that is the only amount of capital that is at risk for that position.
Yeah, I mean that's what people are used to in crypto futures exchanges.
Yes.
It's
In
just
traditional exchanges, it's the other way around. Like
yeah, that's
most
what I was just gonna
exchanges,
mention. That yeah, when you're trading on a broker like Saxo or one of these FX brokers, then you run the risk that in a really adverse market move, that they'll now go after you for the balance, which is, I think is whether or not someone's KYC'd. I think this is a bad UX in general.
yes. So in traditional equity exchanges, typically you can see Hong Kong Stock Exchange or Taiwan Stock Exchange. Um, there is a 3-year period. They will ban you from the exchange for 3 years if there's a default. That event that your losses are more than your margin is called a default. And in a default, you have if you don't furnish it within 10 days or something, you will go into a ban period. We don't have that. That is not the norm in crypto, and we haven't built for it either. And it, I think, also goes with the fact that we are not doing any KYCs and it's an email only registration. We have little flexibility to do that. And yeah, I think other than that, the processes are pretty much similar to all how traditional exchanges would also work, right? There's a similar open order book and liquidation. Then it goes to, if there are losses, there's an insurance fund in place. And if those insurance funds are not in crypto, we have an ADL flexibility that if the insurance fund is not able to cover, then there will be an ADL. And in that ADL, basically at the end of the day, you want to make sure that net OI is zero. If net OI is not zero, then it's a problem for everyone. It's a problem for the customers. It's a problem for the exchange. It's a problem for those who are currently holding a profitable position, because it is something like maintaining sanctity of the system. If that is not maintained, then something somewhere is broken in the risk management of exchange. So that is the basic equation you need to follow.
Yeah, exactly. Yeah, I mean that's the overall liquidation process that most people are used to at this point, and I think the partial liquidation using a linear margin requirement is it makes for a more orderly market versus alternatives. So yeah, I think that's a decent, well-built risk system in general.
Yeah.
How
Let's
about
talk about
go
the
ahead.
mark price. And there was a question on the mark price and how do we make a smooth index and handle the VIX, right?
Yeah, so yeah, could you tell us a bit about the mark price formula that you're using and how you calculate the index, which is the largest input usually for these mark price formulas?
Sure. So the we do a fair price marking, which is basically marking your positions on basis of a mark price and not the last price. Mark price is calculated using the index price, and the basis, or basis is the smaller component, like you rightly said. The meatier component in that is the index. Basis is calculated using the order book and its own history. Index is calculated from other exchanges, and this is where we have to be very careful. I think this is where there are chances of making most mistakes. In the last 1 or 2 years, this is where I've seen most of the issues that have happened. I remember Halloween, there was an issue with Deribit on the index price. That price went from 9,000 to 7,200, and I had done a blog post on that as well. And we also have the same index on Bitcoin, but we did not have issues. So let me go over how we have handled these problems. So whenever you are, when you're building an index, the first thing is that you want to build you want to take price of underlying from exchanges that are most liquid in those underlyings. So if we are looking at BTC USD, then we have to look at exchanges which give you good price for BTC USD, one of the most liquid prices for BTC USD. So we use Coinbase, we use Kraken, we use Bitstamp, and there are a bunch of other exchanges as well. Like I said earlier, we don't mix BTC USD price with BTC USDT. No, we don't mix it with BTC USDC. No, because that is not pure BTC USD fiat price. Ideally, it should be a pure uninterrupted base currency and a quote currency. So we look for exchanges where this pair is liquid and we take prices from them. And then we are getting a continuous stream of prices from these exchanges. So we continuously monitor what is the frequency of this price, how soon are we getting this price, and then basis of that we qualify every component exchange as a healthy exchange or an unhealthy exchange. So if an exchange is not printing any trades for some time, we qualify it as unhealthy. Okay. Unhealthy means that we will stop taking price from this exchange. Uh, so if you are not providing any LTP data for last 1 minute, then we mark you as unhealthy, and we think that something is not correct. Now, when we mark that unhealthy, we first fall on the order book, that we get the buy side order book and we get the sell side order book. If the order books are still changing, then it's still okay. We allow it a 5 minute window to get the prices from the order book. If the order book is also not changing and it's stale, then we mark the exchanges continuous as a totally unhealthy exchange for now, and wait for it to resume these characteristics, that there is continuous trading and the price is healthy. So the first fallback is making sure that LTP is changing. Then the next fallback is making sure that order books are changing and we are able to get a price from the order book. After that, we make sure that none of these order books that we are getting are from auction periods. So what happened on Coinbase when Deribit had an issue was that Coinbase was an auction. Auction means that order book will keep changing, but it will not be a representative order book because there is no matching that is allowed to happen, right? That is an auction phase, which is still a price discovery or a pre-open phase, as most of the people call it. So we make sure that there is no auction phase, and we try to determine that by comparing the order book of one exchanges to other exchanges and the benchmark. Once all these tests are passed, then only we qualify that exchange as an exchange from where we are going to read the price for. And we have bunch of underlines. We have about 30 underlines on our platform because we have about that many coins. So for each of these coins, we have different exchanges and different places where we take data from. Some of the exchanges have, some of the underlyings have 3 exchanges, some have 2 exchanges, some have 4 exchanges. So we have to have different rules for each and every one of them. If there are, 2 exchanges, then we mark exchange as primary and secondary. That which is the most prominent exchange. If there are 3 exchanges, then we look at, okay, none of these exchanges should be very divergent from one another. If one of the exchanges is divergent from another, then we look at a benchmark price. And that is how we do our outlier selection. I know that I'm going over a lot of this stuff very quickly, and it might be a little too much information, but yeah, I'm just trying to list the number of checks that are in place to make sure that the prices that we are getting from any of these exchanges are reliable. And the biggest challenge that we face in these kind of scenarios are wicks, because there will be a sharp tick that will come, and if it goes through the index, and it can potentially liquidate people. And uh, basically that then you once your liquidation has happened, there is a little recourse to do anything. So we want to make sure that the index is super stable. Our biggest challenge is when there is a single underlying, that for example, if a coin is listed only on one exchange, more often than not, in such cases we will make sure that, look, order book is healthy at a much tighter range. So we reduce that 1 minute frequency to a 30-second frequency. We also start to take moving average of the underlying to smoothen it, and to make sure that there is no wick on the index price that we are getting. Also, if the underlying is not trading, let's say we are we have a BNB BTC contract, of which the underlying is BNB on Binance. And I'm just taking an example that underlying is coming from Binance and Binance only. And if Binance is in maintenance, then we don't allow futures to trade either, because we don't have a good price to mark the future position. So in that time, we disrupt the futures contract, we disrupt the market, we say that no more trading is allowed in this contract till a healthy underlying price is available. Underlying comes up, we resume our futures trading as well. We do it via an auction, that there is a pre-open phase, which is a post only, and then there is trading that begins. At any point during this time, you can definitely add margin to your positions so that there is no liquidations. But yeah, we don't allow trading if the underlying is not available. So yeah, bunch of things I covered here.
So how do you? Yeah, I think that's a good robust system that you've laid out, especially given that you have some pretty low liquidity, high volatile underlines that you have contracts run on. Yeah, I think that covers it well, and I think a lot of people, they have experienced these scam wicks or other kind of issues on high leverage exchanges, and it's good that you are going into this detail, because this is what I think people appreciate when it comes to having a robust system, is that every little detail is outlined, both for the index construction, fair value, mark price formula, and the entire risk system of how liquidations are handled, and how the overall system's risk is maintained well. So we'll open up the questions now to the larger group, and one that has just come up is they're asking if you have a Bitfinex feed for the underlines.
So not on BTC USD, but we have we use Bitfinex prices for Leo. We use Bitfinex prices for XAUT, and we use Bitfinex prices for IOTA. For BTC USD, we don't use Bitfinex prices, and the reason for that is Bitfinex in the past has had some incidences with fiat interruption, right? So you might remember last year, around 6 months back, there was an incident when Bitcoin was trading at a premium on Bitfinex as compared to other exchanges. That was the time when Bitfinex's fiat ramp was discontinued or disrupted for certain 15-20 days. So that is why we don't use BTC USD price from Bitfinex. Because we want that uninterrupted fiat so that people can freely exchange the two assets.
Yeah, that's a fair point. So it is included in the Tether ones where it makes sense, but not for USD.
Yeah, because those contracts. I'm sorry, I was saying that those contracts
different. Tether's different.
Yeah.
Yes.
Yeah, we get that. Yeah. So we have to wrap this up. We've been going now for a bit over an hour and a half. So we want to respect your time. And if anybody else has any questions you think that we missed, I think we went into some good detail on this. So I don't think we missed anything. But yeah, so let's just say thank you very much, Pankaj, for your time. I think a lot of people are interested now to try your platform, particularly for the altcoin futures. I think you have a decent product set, a well thought out risk management system, a nice UI. I was playing with it a little bit earlier. So thank you very much for your time. Thanks for coming on and going through your platform's various features. Thanks very much.
So thanks a lot, guys. It's a pleasure to be here, and we are really passionate about these things, so we can talk long time for hours and hours. And this is building a derivative exchange is it's an intricate job. There's a lot of things you need to take care of, and we are happy to discuss any of these things with any of you who might be interested. We're very accessible. I'm also on the Telegram group. You can feel free to ping me. Ask any questions, and do try out the platform. Website is rather simple, delta.exchange, and it's a rather simple UI. So yeah, I look forward to more of you joining and trying out the platform. And thanks, Swapman, and everyone for having me here. And it was great to come here and interact with you guys.
Thank you for your time.
Yeah, we appreciate the transparency and openness. Not every exchange is willing to do that. So thanks a lot for your time.